What are the hidden gems of US investing that the pros are buying? In this video, we'll explore some lesser-known but high-potential investment opportunities that could help you grow your wealth. From small-cap stocks with big growth potential to undervalued tech innovators and niche market leaders, there's a lot to discover beyond the usual big-name stocks. We'll also look at how to tap into emerging markets, sustainable companies, and even over-the-counter stocks that could offer significant returns. If you're ready to think outside the box and find the investments that savvy investors are picking, stick around. Let's get into it and see what could help you boost your portfolio. Small-cap stocks with high growth potential. Sometimes the best investment opportunities aren't the big, well-known companies, but the smaller ones flying under the radar. That's where small-cap stocks come in. These are companies that are still in their early stages, but they've got room to grow, making them attractive to investors looking for high returns. While they may not be household names, their growth potential can be huge. What makes small-cap stocks exciting is that they often have more flexibility and are able to adapt quickly to changes in the market. If you find a company with strong fundamentals, things like solid earnings growth and a good management team, you could be getting in before they really take off. Sure, there's a bit more risk involved, but the potential reward is worth it for many investors. By focusing on small-cap stocks with strong financial health and growth potential, you're tapping into opportunities that bigger, more established companies might not offer. It's a way to invest in the future of industries and companies that are just getting started. Undervalued tech innovators. When people think of tech investments, they often picture big names like Apple or Google. But sometimes the real opportunities are in the smaller, lesser-known tech companies that are quietly working on the next big thing. These undervalued tech innovators are often focused on cutting-edge technologies that could disrupt entire industries. What makes these companies so exciting is that they're usually in the early stages of growth, meaning they haven't yet captured widespread attention. If you can spot them early, before they become household names, the potential for growth is huge. These firms might be working on anything from AI to renewable energy solutions, and as they gain market share, their stock value can rise significantly. For investors who like to be ahead of the curve, looking into undervalued tech innovators can be a smart move. It's all about identifying the companies that are quietly making waves now but have the potential to become major players in the tech world down the line. Niche market leaders. When it comes to investing, sometimes the best opportunities lie in companies that specialize in a specific niche. These businesses might not be the biggest names out there, but they dominate their corner of the market. Niche market leaders often face less competition, allowing them to maintain loyal customer bases and steady profitability, even when the broader market is volatile. What's great about these companies is that they've carved out a strong position by being the best at what they do. Whether it's a specific product or service that meets a unique need, they've found their lane and stick to it. This focus can lead to more consistent growth, as their customers aren't likely to go elsewhere. Investing in niche market leaders can offer stability and growth potential. While they may not have the wide appeal of larger companies, their ability to dominate a specific market can lead to long-term success. For investors looking for reliable returns, these companies can be hidden gems worth considering. Dividend-paying small caps. When people think of small-cap stocks, they often focus on growth potential. But some of these companies also pay dividends, offering a great balance between growth and income. Dividend-paying small caps can provide steady income while still having room to grow, making them a unique addition to an investment portfolio. These stocks are particularly appealing to investors who want both regular payouts and the chance for capital appreciation, while small-cap companies are generally more focused on expanding their business. The ones that pay dividends show financial stability and a commitment to rewarding shareholders. This combination of income and growth can make these stocks a solid choice for long-term investors. By including dividend-paying small caps in your portfolio, you're getting the best of both worlds. Regular income from dividends, and the potential for the stock price to rise as the company grows. It's a smart way to diversify while still keeping an eye on growth opportunities. Emerging market ADRs. If you're looking for ways to invest in high-growth international markets without the hassle of dealing with foreign exchanges, American Depository Receipts, ADRs, might be the perfect solution. ADRs allow U.S. investors to buy shares of foreign companies that are traded on American stock exchanges, giving you access to emerging market growth stories from the comfort of the U.S. market. These ADRs can be hidden gems, especially in emerging markets where companies are growing quickly and tapping into expanding economies. The best part is that you don't have to deal with the complexities of foreign investment. ADRs make it simple to invest internationally while benefiting from U.S. trading rules and protections. Savvy investors often look for ADRs of companies with strong financials and solid growth potential. By focusing on these, you can gain exposure to fast-growing markets without navigating foreign currencies or exchanges. It's a great way to diversify your portfolio and tap into global opportunities. Over-the-counter (OTC) stocks. Over-the-counter (OTC) stocks don't always get the attention they deserve. These stocks are traded outside major exchanges like the NYSE or NASDAQ, and because of their higher risk and lower liquidity, they're often overlooked by many investors. But with the right research, OTC stocks can offer some hidden opportunities that might be missed in more mainstream markets. The appeal of OTC stocks is that they're often undervalued or represent smaller companies that haven't yet made it to the big exchanges. If these companies grow and eventually list on major exchanges, early investors could see substantial returns. Of course, the key is doing your homework. Thorough research is crucial since these stocks can be more volatile and less regulated. For those willing to take on a bit more risk, OTC stocks can present opportunities for significant growth. It's about finding the right companies that have strong fundamentals and growth potential, and getting in before they gain broader attention. Sustainable and ESG-focused companies. In recent years, investing in companies that prioritize sustainability and strong environmental, social, and governance (ESG) practices has gained a lot of attention. These companies focus on things like reducing their environmental impact, treating their employees well, and maintaining transparent governance. Not only are they often well managed, but they're also set up for long-term success as more consumers and investors demand ethical business practices. What's great about ESG-focused companies is that they allow investors to align their investments with their personal values while still aiming for strong financial returns. Many of these companies are forward-thinking, which can lead to steady growth as the world moves toward more sustainable practices. It's a win-win for those looking to do good, while also growing their wealth. By focusing on ESG-focused companies, you can build a portfolio that not only delivers potential financial gains, but also supports businesses making a positive impact on the world. It's a smart choice for investors who care about both profits and principles.